Hi everyone, Angie with Angie Home Loans and NEXA Lending. Welcome back to the Real Estate Investors Loan Series. Today we're going to be going over portfolio loans, but it's going to probably be in 2 episodes. So we're going to call this one episode 9A. So have you ever wondered how some real estate investors own 10, 20, or even 50 rentals? At some point, many investors discover that conventional financing isn't always the best fit anymore. That's where the portfolio loans may come into play. So what exactly is a portfolio loan? Unlike conventional loans that are often sold to investors on the secondary market, portfolio loans are typically kept by the lender in their portfolio. And that's actually where the name comes from. Since the lender plans to keep the loan instead of selling it on the secondary market, they often have more flexibility when creating their own lending guidelines. Why would somebody need one? As investors grow their real estate portfolios, they sometimes reach a point where traditional financing becomes more limiting. And we kind of went over this in DSCR loans as well. If you have, 20 different properties on your credit report, that's going to weigh down your credit score, and it's going to be really hard to get financing in conventional terms. So a portfolio loan may offer another financing option for experienced investors who need more flexibility than conventional lending can provide. The biggest difference, one thing that's really important to understand, is that there isn't one universal rule book for portfolio loans. There's no cookie cutter, these are the guidelines. Every lender is different. Think of it this way. Conventional loans follow a fairly standardized set of guidelines. Portfolio loans are more like every restaurant having their own secret recipe. One lender may allow something that another lender won't. One may finance certain property types while another specializes in something completely different. That's why choosing the right lender becomes especially important for these loans. Who uses portfolio loans? They're commonly used by investors who may own multiple rental properties, need financing outside of traditional conventional guidelines, have unique investment goals, or simply need more flexibility than conventional financing offers. So to wrap it all up, if you've been hearing experienced investors talk about portfolio loans, hopefully this gives you a better understanding of what they are and why they exist.